Hello, everyone. This is Sasha with the LTRC. Thank you for joining us for the 2021 Mid-Year Accounting Checklist for Law Firms with our sponsor, CosmoLex, as part of the LTRC Industry Insights series held every Wednesday. Our speaker today is Erica Birstler. Erica is the Vice President of CosmoLex, developers of the only fully integrated case management, billing, and complete accounting system specifically designed for law offices. Erica's degree is in business administration, and she has nearly a decade of experience in the legal software industry, catering to the specialized technology needs of small to mid-sized law firms. Erica is passionate about helping legal professionals improve the way their law firms run, and she has given numerous presentations across North America on legal technologies such as law practice technology management, cloud computing, and legal billing and trust accounting compliance to help spread her knowledge. Thank you all for joining us. We'll now begin the webinar.
Great, thank you so much and welcome everyone. So today we'll be talking about accounting, and I think most of the time this is thought of end of year or maybe at the very start of the year, but I do think mid-year is always a good time to take a pulse on many different parts of your business, one of which being your financials. So what we'll be covering today is first talking a little bit about law firm accounting in general. What are the different activities that are categorized as accounting related, but also what's unique about those functions for law firms that other businesses may not need to focus on. Then we're going to be talking about the mid-year legal accounting checklist. So I'll walk through the various bookkeeping activities suggested at mid-year. Like I said, these are more so touch points. A lot of these should be done monthly, some of them annually. Now's a good time to just kind of see if you're on course to wrap up the year the best way possible. Do note, as Sasha mentioned at the beginning, we are providing the complete checklist as a handout. You will see that in the chat and also in our follow-up email. And lastly is, how can technology help you to get ahead? And I have to say, I think when most people think of accounting, technology is not often what comes to mind. It's very, by the book. It's tends to be black and white, not usually looking at tools and technology to kind of improve that process, but we will be talking about a handful of tips that can help simplify that overall workflow, which can help with your efficiency and also the accuracy of your information moving forward. So with that, let's dive into our first point, which is, what is legal accounting? Now, when we talk about accounting, I know that we could have people of all various levels of knowledge when it comes to accounting on the call. So I always like to just break this down quickly. For some of you, this may be a review. For some of you, this may be brand new information. Either way, I do find it worthwhile. When I talk about legal accounting myself, I tend to put it into three buckets. The first being what every business needs to focus on, which is business accounting. The term business accounting is a very broad term. It can cover many different things, but typically what you're talking about is your expenses as a business, as well as your income as a business. The reconciling of your bank accounts. Typically a firm would have a bookkeeper who does routine reconciliations, but also being prepared for your tax reporting at the end of the year. A lot of this does factor into either your financial planning as a business or prepping for tax at the end of the year. For law firms, of course, this is important. For any business it is, but you also need to keep in mind matter accounting. You have a unique responsibility to your individual clients and their cases to make sure that you are tracking their costs effectively. So anything that you pay out of pocket that needs to be reimbursed by a client, that has to be recorded, but also their trust ledgers. Are you holding funds on hand for them in the trust account? Are you managing that properly? Is it broken down individually by matter and easy to report on that information? And allocations for your payments. I know for law firms, when you receive money into the firm, you may want to report on maybe different practice areas, different offices, different attorneys. You may do distributions based on who's working on that file or who brought in that file. And they can get pretty complex, those formulas. So you do want to make sure that however you're handling that in your firm, you're able to do so with the tools and processes that you have. And then lastly is compliance. So Of course, everything I mentioned is good to just grow your business and make sure it's successful, but there's also a component of certain things you need to do to stay in business from a compliance perspective to keep your license active. And that does vary by state. So a lot of what we talk about today is fairly generalized. There's a lot that applies across the board, but it's always advised to check with your individual state and bar association as to what your requirements are. For example, your trust audits, you have specific trust requirements. Your audit program, it differs state by state. So you want to know what the expectations are there, what you may need to be able to provide, what standard you're being held to, and also any legal specific requirements. So some practice areas require certain things to be done a certain way in order for you to be doing the right service for your clients. So sometimes that involves the trust account and funds. Sometimes that involves other things like deadlines and recording of those deadlines and informing your client of certain information. That is all on you. You need to make sure that you take that responsibility seriously, obviously. And a lot of that does wrap into your financials and your overall accounting. So that's kind of the broad spectrum of accounting from a law firm's point of view. What I'd like to now is actually launch a poll, keeping all that in mind. Who currently handles your regular accounting tasks? And this is majority. You may have a combination of all of these, but the majority of your tasks, are they managed from an accounting perspective by the firm owner or partner, an internal non-bookkeeping staff, an internal bookkeeper, or an external bookkeeper or accountant? So we'll leave that up for a short bit. Okay, so as you all should be able to see the results, we have 35% firm owner or partner. Now, some of you may be solo person shops, so that could be part of the reason why that's a little bit higher. Second is 29% have an internal bookkeeper, 24% have an external bookkeeper, and then last is an internal non-bookkeeper staff. So, all right, great. Well, thanks so much, everybody, for giving that feedback. I think it's always helpful to see how other law firms operate. Now, of course, you are all likely different size and different resources, so do keep that in mind. But I think that how you handle your accounting, it's not about who does it, it's about how it's being handled and what your awareness is. If you're doing it yourself, of course, there's 100% awareness, but should you be doing it yourself? There's a lot that you need to accomplish in a day. There's a lot more activities that your time is probably better put towards. But if somebody else does it, where's your awareness at and how are you making sure it's being done the right way? So let's go ahead and dive right into our checklist. The first thing we're going to talk about is billing. So you want to make sure, most of you probably do routine or monthly billing. Some of you may be very contingency or fixed fee focused, where it could just depend on the type of case. Either way, I think mid-year is a great time to just see where you're at. Think about all of your time that you've been tracking. A nice little recap. Has anything been missed? Expenses too. I think very often, one of the points we'll talk about in a bit is reconciling your bank accounts. When you reconcile, have you noticed costs that were missed? Items that were dropped in regards to anything having to be reimbursed by a client? Make sure those are captured and accounted for, and that they are invoiced and included in that invoice. And if you're going to run a billing, let's say end of June, we're saying June 30th just because that's the exact mid-year, but of course it depends on your billing cycle. Any of those missed items you want to try to capture in that last billing, because yes, 6 months is a long time to wait in case some of these items are like from January, but a year is even longer. So this is a way to reduce the amount of workload that's going to happen at the end of the year when you're retroactively looking back for those missed items. Ideally, that should happen every month, by the way. You should always be recapping your files, seeing what's been missed, and ensuring that's included on the upcoming bills. You also want to apply any available payments. So if appropriate, if it makes sense to invoice and also apply payments for that file, you want to apply any funds that are available, which could be trust funds. You might have retainers on hand. Again, this is a monthly activity, but it's always good to verify that is being done appropriately. And you might even need to prepare trust ledgers. Some states require that you provide a trust statement to your client to say, here's all the information, or here's all the trust activity that's taken place in the last month. If you haven't been doing that, now's a good time to say, here's what's happened in the last 6 months, to ensure that they have that. And you also want to make sure that there's no unallocated payments. And what I mean by that is sometimes you might have payments that are recorded in maybe your accounting software, but not linked appropriately to a specific invoice in your billing tool, or you might have received an overpayment from somebody, or in your billing software, you might have unlinked a payment and never went back to link it to the invoice. So just kind of doing your due diligence to see, is every invoice applied a payment? Is there any money left over? And what do we do with that leftover money? If all of your invoices are paid and you still have money that's kind of unaccounted for, but you know it's related to clients, you need to check your local bar rules to figure out what to do with those funds. I'm not talking about trust funds in this situation. That's a separate topic. I'm talking about money that you received in your business account from a client, and there was either extra or something that has not been allocated to an invoice or a particular activity that you're doing for your client. Sometimes these funds need to be moved to trust. Sometimes they need to be returned to the client, or sometimes they may be permitted to be held in that business account as a credit for future. But that is something that varies state by state. So make sure you're aware of what the rules are in your state to handling client funds that may not be in the trust account. Oh, sorry, let me go back one step. Accounts receivable. So you want to take a look at your aging. The reason we say this mid-year, again, it should be a monthly task, but it can get extremely daunting. And I think unfortunately, a lot of these items, when they're left to the end of the year, it's so late at that point, you end up writing everything off. It's like, you know what, that was 8 months ago. There's nothing I could do about it now. Let me just write it off. So the sooner you look at the invoice aging, you're seeing items that are going up 60 days, 90 days, 120 days, a red flag should go up like, wait a minute, why is this still unpaid? Let's do something about it. Do you have proactive collection activities to follow up monthly with your clients that are past due? If not, you want to definitely do something at least quarterly or at the middle of the year to say, let's see if we can recover as much of these funds as possible so that you're not writing it off at the end of the year. And that includes retainer balances. You may have money sitting in trust that you just have not applied to bills. Maybe just it was looked over or forgotten. So now's a great time to look at your AR versus trust balances for each one of your files and go ahead and earn those funds if it's appropriate for the files that you're working on. Next is reconciliation. So this is probably the most important routine accounting activity that you can do. In general, bank reconciliation should be completed monthly. For those of you who don't know, this is the comparison of your book records versus what actually happens in the bank so that you can catch mistakes and that you can fix them promptly. Now, this is a requirement for your trust account. Absolutely a requirement, a must do, because you're managing somebody else's money. So you need to be able to show proof that you're on top of things and you're accounting for any errors in a very prompt fashion. Should be monthly. But you don't want to forget about your other bank accounts, which is your operating accounts. That's your business account. You may have more than one, or your business credit cards. And the reason why these are so important is you have all of your client payments coming into your business account, and you may have client expenses occurring on your credit card accounts. If you're not accounting for those appropriately, while it might not be a compliance concern, it directly impacts your bottom line. If you're not accounting for that money appropriately, your reporting will either be way off or your forecasting could be way off. Or even your invoices could be way off if they're not including, which I mentioned in the previous slide, expenses that were allocated or should have been allocated to a certain file before billing. So as I said, it is recommended to do this every month to ensure you're capturing those items even before you do your billing. All right, so in regards to a few tips that we have here with Reconcile, first thing is make sure all of your bank fees, wire fees, interest, that it's entered and cleared. I think that's one of the items that it just occurs on the bank's side. They may charge you for a wire, let's say, and you have to be consciously aware that that has to be added in your book record in order to reconcile properly. So make sure you're aware of any fees that are happening in your account. For the trust account, Ideally, no bank fees should happen in the trust account. That is just part of your trust compliance. You shouldn't be taking any money out of the trust. Ideally, that should come out of a connected business account. If it is not, you want to talk to your bank and see if that's possible. Saying, if I have a wire fee, if I have anything else, take it out of my business account so it's not impacting my clients. Another thing to keep in mind is with your credit card statements, you want to enter finance charges, interest, late fees if they do exist. Also, if you have any cash rewards, which is basically a credit on your statement, account for that as well, because that impacts your balance that needs to be paid out of likely your business account is where you're paying that credit card. Second is to clear your transactions. Depending on your firm, you may be highly transactional or not, but it's always good practice to read through them and verify each individual item. That is what mostly bookkeepers do. I know some of you outsource that, some of you do it yourself, but take your time to actually go through those items one at a time, because you could have 2 transactions on the same day of the same amount for 2 different clients. Or you could have a duplicate. How do you know in which situation it's a duplicate, meaning a mistake on either the bank side or your record keeping side, or if it's legitimately a similar transaction that happened on the same day in the same amount? That's why it does require that special attention to detail. Even if you're using imports or bank feeds or ways to automate your reconciliation, there should always be a confirmation stage where you're like, this matches, is that correct? Yes, okay, let's go. Don't let automation take away reconciliation for you, because that is your responsibility. Aged transactions is uncleared items. So anything that has not cleared month over month, you want to make sure that you are addressing those. Over 1 month is totally normal. You know, something may have been deposited end of the month, takes a few days, totally fine. If it's month over month over month, something happened. Did a check get lost in the mail? Did the bank make a mistake? Was that item even sent out? Was that check even sent out? But that is your responsibility, especially when it comes to the trust account, to make sure that those uncleared items are addressed. If they're not, there's also the concept of unclaimed funds. And again, every state's different as to how you handle that, but you want to make sure if there's any money that, let's say you sent that check out and it was returned to you from the trust account, well, that's not just money that you can keep. You need to figure out what to do with that money. And there's a certain process for each state as to how to handle that. You want to confirm your matter links, anything related to a matter, which could be obviously trust transactions, matter costs, invoice payments. Ensure that linking is correct and that you don't have those unallocated payments that we mentioned earlier. This is something that's often overlooked for credit cards. When you have a business credit card, you have stuff for your firm, like you may be paying for office supplies, maybe even pay for your rent on your credit card, but you're also paying for filing fees, expert witness fees, different things associated to that case that you want to be reimbursed for. And lastly is adjustments. So 2 points on adjustments. One is bank errors. They happen. You know, the bank may do a double deposit. They may do transposition of numbers. They may put in just the wrong amount overall. That is the point of reconciling. It's not just double checking the work that you and your staff is doing, but what the bank is doing, because mistakes definitely do happen. You need to have a way to log these errors in a way that should be ideally reversed within the next 30 days or so. Is pretty ideal, but you need to be able to track those errors, know that they're outstanding, and have a way to reverse that. And it should show up on your reporting that this is a bank error. Don't penalize my client for it, but this is on the bank's side. And the other thing is just routine adjustments. Sometimes if you've done everything from a reconciliation perspective and you're off by a couple of cents, some bookkeepers or accountants decide to enter that as an adjustment. Now, you can't do this with a trust account at all. You cannot do adjustments to balance out your reconciliation. That is in non-compliance. For your operating account, you have a little bit more flexibility. Work with your bookkeeper or accountant as to when that makes sense. What amount, like if it's a couple pennies here, that's one thing. If it's a couple $100, that's something completely different. But that's for you to decide on the business account front, but you cannot just randomly do adjustments for your trust account. Speaking of trust account, a few unique things to keep in mind. So everything I mentioned about reconciling applies to the trust account, but you also want to confirm the retainer balances. Is the work on a matter complete? Did you bill all of your time? So this is a little bit of review of what I talked about before. Did you bill all of your time? Did you apply all available funds? Is there anything left over? What is going to be done with those leftover fees? I think another thing is really important is if the work is done, are you inactivating those clients? Are you ensuring that this case is done? Is the money completely addressed? The trust account should be zero for that file. If it's not, what should have happened with that money? Should it have been earned? Should it have been returned to the client? Should it have been dispersed to a third party? And you should be able to prove that this is closed and everything else was taken care of. In terms of the trust activities, you want to make sure that you have a full ledger. Every matter should have a ledger of money in and out of the trust account. You should be able to produce that quite easily, not just for an audit, but to your client. If anything had to be done with that money, whether it be earned or dispersed to third parties, were those all done appropriately? I did also mention earlier about the unclaimed funds. So if you've done everything you possibly could and you still have that money left over in the trust account, you have to speak with your bar association. You can't just write it off or pretend it didn't happen. That will cause huge issues for you because you'll be technically stealing your client's money. So make sure you follow the right process for that. In regard to reconciling, so everything I mentioned before applies. You need to compare your book and your bank every single month. You need to account for your bank fees appropriately, even though they should be coming out of an operating account and not a trust account. You need to run your regular reconciliation reporting, which will show what's cleared, what's uncleared, is this month balanced? But on top of that is a three-way reconciliation. That compares what happened in your bank, what happened in your book record, and all of the individual ledgers for each matter. They should all add up to the same number. So you want to be able to produce that report. Most auditors actually ask for that report. And if there's anything else, like a trust balance report, maybe proof of last activity too. Very often they'll say, well, there's money in this account. When's the last time you did any activity for them? If it's several years, then there may be some questions. If it's just a couple of months, then maybe not so much. So having that proof is really important. Rule of thumb is trust reports really should be done monthly. So, and the reason being is if you find a mistake or something's not balanced, you need to address that ASAP. Do not wait till end of year, especially. Even mid-year is late, but now's a great time to catch up and make sure whoever's doing these activities that they're on course and they're doing them appropriately. I feel personally with the trust account, especially, I am in full support of outsourcing accounting activities. I think there are people that are experts in that area that do it best. Legal bookkeepers specifically when you talk about the trust account, but they need to provide some sort of proof that they're doing things in a timely manner and in an accurate manner. And you need to decide, have that conversation and figure out what that should be. Reviewing your financial reports. So this is very much an end of year task, but I think it's good to kind of just check in middle of the year, look at your balance sheet. Now, like I said, you could do this end of the year, but it's great to say, as of this point, do I have any new acquire new assets during the first half of the year? Are they on my balance sheet? Was there any depreciation in the first half of the year? Is that on my balance sheet? Any client costs? Some of you may account for your client costs as an asset. Are those recorded appropriately? Is there anything that has not been recovered? And how do you want to handle those items? With liabilities, that comes down to even your credit cards are liabilities. If you have any loans, and we'll talk about a lot of things that came about with COVID this past year, loans and forgiveness of those loans, long-term, short-term. Is your principal decreasing as you're making these payments? Are they being recorded properly on your balance sheet? And also for equity, you want to identify any owner-initiated contributions. Have those happened in the last 6 months, and are they properly recorded? Like I said, this is usually an end-of-year thing, but it's not a bad idea to check in. When it comes to the profit and loss, most of you probably operate on a cash basis. So your income and your usually kind of aligns with your paid invoices. When you receive that payment is when you receive that income. So you want to look at your income accounts, make sure your fee income is accurate. If you have any client costs that are accounted for as an income account, you want to make sure those are recorded properly. Overhead, any soft costs like printing or photocopying that you may charge to your clients, but also your rent and your utilities and your general business expenses, are those all recorded as they should be? And you may have a payable system in which you're tracking your monthly bills. Check in on that right now and say, well, do I have these on the right schedule for the right amounts? My rent might have gone up or gone down, or something may have changed in the last 6 months. Is that properly being accounted for? Some additional activities to keep in mind. It's always good to take a look at your trial balance, which is basically a summary of your entire general ledger, all of the balance sheet and profit and loss accounts in one report. It will let you know what has gone on in the first half of the year and where you're at that point in time. You do want to verify that your net income matches between your profit and loss and your balance sheet. Typically end of year, that's when you're going to go ahead and move that over to usually retained earnings or owner's equity. But again, now is a great time to check in and make sure everything is how it should be. Close your books as of June 30th. This is a personal decision. Some firms, or businesses I should say, close their books monthly, some quarterly, some biannually, and some annually. Basically, this just prevents, if you are doing a review and a check now, it will prevent any changes on your general ledger prior to that particular date, which is great if you have a lot of people who are in your accounting tools. That way you're ensuring that that record remains as is. Not a bad idea to verify your 1099, that you have that on file for vendors. Any vendor that you do business with at the end of the year, if you pay them more than $600, you have to file a 1099. Do you have the tax identification number? Do you have any other identifying information that they need? Have you flagged them as eligible for 1099, or are they not eligible based on the type of business that they are? You could do that review. And then just think about the upcoming year, forecast your income. Where do you think, based on where you are now, where do you want to be at the end of the year? And how are you going to get there? Are you on track with your business goals for the entire year? I think we often get lost in the day-to-day and we don't think to bring ourselves back to, well, are we actually on track? Or are we ahead or behind? And we can adjust accordingly. That also helps you to figure out your tax planning for the end of the year as well. And we always suggest to seek accounting advice for any and all of this, especially if you're a newer firm, or I know many, many lawyers that were previously part of a much larger firm and are now kind of branching off on their own. There's so much new responsibility that you need to take on as a business owner that you may have never done. You may have been a lawyer for 40 years, but you've never owned a business. Seek that advice. That's perfectly fine and actually encouraged. Figure out how you should manage your books, what goals you should have, how to measure those goals, and how to ensure you're on the right path to growth. And you also want to think about this past year, has anything unique come about in regards to COVID assistance, the loans, or even loan forgiveness? Have you accepted any loans in the past year? Have you put any payments towards those loans? Have there been any forgiveness on those loans? And also any changes in your business that you want to account for. Have you had a lot of staff work remotely? Were there certain expenses associated with that? Did you downsize your office? Did you increase your office space? There was a lot of fluctuations happening when it comes to managing a business in the past year. You just want to make sure that you're taking that into account. I know majority of that took place in 2020, but there was still very much the first half of 2021. A lot of businesses are still dealing with these changes and trying to adjust the best way possible. And lastly, just a few tips to leave you guys with, which kind of talks about how technology can really help you out. The first is cloud tools. I used to have to educate on what cloud is and why it's beneficial. Not really the case anymore. We've all kind of experienced firsthand this last year why accessing your information outside the office securely is hugely beneficial. And I think going forward too, the concepts of so many more people working from home, hybrid work, or even outsourcing help. You may have an external bookkeeper. Cloud technology really helps you collaborate them more effectively, and you're not having to worry about all of the IT logistics of it. Consolidate your records as much as possible. That's your billing, your trust accounting, and your business accounting especially. Those make up the financials of your firm. That is your money. That is how you earn a profit as a business, is all of that. That's your back office. Your front office is kind of the activities you do to make that money. But once you're making that money or holding on to money for your clients, that is your back office. Consolidate it as best as possible so that you're not entering information in multiple places and it doesn't impact your accuracy. Use tools and processes to enforce legal compliance. As I mentioned in the very beginning, there's so many things that are unique to law firms. Ensure the tools that you're using encourage what you should be doing and discourage what you should not be doing. If you're using generic tools for your accounting, they're not going to stop you from overdrafting on a trust account. They're not going to provide you with the compliance reporting that you need. They're not even going to provide you with the general ledger accounts that you need as a lawyer. So could you use those tools? Sure, absolutely. But then there's additional responsibility on you to make sure they're being used properly. And really embrace technology. I think really the floodgates have opened, especially in the legal industry this past year, of all the different tools and technology that people can utilize. Aim for efficient work in your business, but when it comes to financials, you need to maintain your accuracy. Don't automate to a point where you don't even know what's going on. You know, there's such a thing as too much technology in some situations. Figure out, judge what makes sense for your business, but most law firms especially could definitely implement more technology going forward. All right, so that wraps up our session today. I do want to mention, for those of you who are not familiar with CosmoLex, we are a cloud-based all-in-one practice management tool for law firms that includes your billing, your accounting, and your day-to-day activities, including all the different functions we talked about in today's checklist. So if interested, absolutely feel free to reach out to us directly. And as I mentioned, we do have that giveaway. It's currently in the chat. It will also be in the follow-up email. That is the full checklist that we covered today.
Thank you, Erica. So just one question for you. Could you just detail any kind of free trial or so that is all the time that we're going to have today. I would like to thank our sponsor CosmoLex and all of you for attending our webinar as part of the LTRC Industry Insight Series. If you are curious about future webinars, please check out the ABA LTRC page or follow our Twitter @LTRC for updates. I would also like to thank Erica for presenting today. You can keep up with CosmoLex at CosmoLex Legal on Twitter or cosmolex.com. Great, thanks so much. Bye, everyone.
Thank you.